where do you place your faith now going forward? Is it emerging markets still? Are you going to stick to that, to your guns with regards to that, or are you already starting to pick up good buys in the developed world?
Yeah, I think our theory the whole time was that emerging markets were better positioned than developed markets, largely because of the cheaper labor, poor infrastructure. So there's a lot of infrastructure development still that's pushing the economies. Yeah, a lot of things in their favor. And actually now, after what's happened in the last 2 years, most emerging markets are fiscally actually in a better position than most developed markets. I mean, the US got a budget deficit of 11%. I mean, if you were to land from Mars today or wherever, where there is life, and you arrive on this planet and you interview these various country heads, now maybe Obama will impress more than Bush, but okay, but you still look at the financial statistics and you say, okay, sorry, I don't think I'm going to invest money with you. And if you look at a lot of the emerging market countries, fiscally and monetary, they actually look very healthy. I mean, even Japan now has got a trade deficit. So it's not only South Africa and Turkey that have... so, you know, the world has changed. I think emerging markets are structurally still better positioned, but at the moment, fear rules. And by the way, I don't know if you've seen this is very short term, but every time when the Dow has rallied, when markets go up, the emerging market currencies strengthen. And most South Africans only look at the rand. And you'll have seen every time the Dow goes up, you can check the correlation of past week, the rand strengthens. Go and look, the rand just follows. We always think at Zuma or wherever politician is not. If you follow the rand relative to the Turkish lira, Brazilian real, Indonesian rupee, they all follow each other. A bit of difference sometimes, but so the world is driven by a risk aversion or risk seeking, and every time when things look better and shares go up, the emerging market currencies improve. So, but at the moment, emerging market currencies are still beset by a lot of fear. So there are still capital outflows, but once the situation normalizes, capital goes back there because interest rates are still higher there. You're getting almost nothing in the UK, US, Japan, etc. So, Daniel, long answer. In our own funds, we've actually maintained our 50% emerging market exposure. But what we have started to do, there are a lot of large cap stocks, specifically in the US, which we think also will be the first country to come out of the recession of all the developed countries, that are just incredibly cheap. So whereas for 4 years we had almost no exposure to the US, it's now grown to actually 38%. You know, companies like Dell and you know, Ingersoll and a lot of some of the drug companies. So we've actually increased to developed markets simply because a lot of them are too cheap. And then also bear in mind, if you buy Dell, a quarter of its growth at the moment comes from sales in Brazil, India, China. So you know, your large multinationals, in any case, you get a lot of emerging market growth. Unfortunately, I've got to go.
Okay.
So, but I think if there are any questions, then you know, I'm sure Daniel else email me. You know, I'll send you those graphs as well.